let's welcome the most powerful women in business. At least that's the word coming in from Fortune. Devina Mehra joins us now to talk to us about the markets as well. Devina, hi. Good morning and wishing you a very happy Women's Day. It's usually said that women are better investors, more patient, more diligent, etc. Would you concur with the view?
Hi, good morning, and happy Women's Day to you as well. Um, uh, and that's what the data shows. The data shows that women get better results than men. But on the other hand, it also shows that women are less confident than men. So, as I always tell people, that have this on in front of you wherever you sit, your workplace or at home, that confidence does not equal competence, because I find a lot of women are diffident about managing their own money, whereas they should be, because there is really no independence without financial independence. So that is a sort of cause for me to get people and women to manage their own money.
Absolutely, Devina. Couldn't agree more with you. And I can vouch for at least Anisha, Avar, and me that we manage our own money, and financial independence is prime and supreme for at least the three of us. And I hope, people like you and even us for that matter can only inspire women out there to take their finances in their hands, earn their own money, no questions asked, and do whatever they want with their money.
And spend whatever way you want.
Yeah, exactly. But Devina, I mean, for women out there who are watching us right now, or for that matter, any investor out there, if they're starting today, what's the piece of advice that you would give them? Where is it that they should park their money? What kind of asset or allocation? What country? Considering, there are just so many avenues out there to invest in right now.
Yeah, so first of all, I mean, the good part for people who have limited time to spend on the investing game is that most of your returns, 80 to 90%, come from asset allocation, not from stock selection. So we all like to talk about what was the last multi-bagger or what's the next multi-bagger at parties, but that is for entertainment. So the real important issue is to get your asset allocation right. So I am not a votary ever that even if you are young and in a good job, that you should put 100% of your money in equity, because you will and may need some money, maybe for higher education, maybe for to down payment on a house or an emergency. So whatever. So have an asset allocation. Of course, it will be more towards equity when you are younger. So because in equity, the predictability is over the long term, not over 1 or 2 years. So that is one part. And good, you mentioned countries, because I always also say that do not expose yourself to scars, which is single country, single currency, single asset risk. So if you're only in, let's say, the Indian stock market, that is not good enough, because like in the course of my career, from the time I started when US dollar was 12 rupees, it is now 80 to 83 rupees. So that's an 85% depreciation right there. So look at global investing. And global investing, again, does not mean buying a single other country, which is like people think that I bought a NASDAQ ETF and hence I am globally diversified. That's simply not good enough, which is why we introduced a globally diversified product, which starts as low as $10,000, only around 8 lakh rupees, because this again is a cause, because I think, every Indian investor should have a reasonable part of their portfolio in the global basket. So that is the thing. The other important tip I'd like to give is that don't be at either end of the risk spectrum, because last year I used to see people who have never even invested in equity going straight from fixed deposits to crypto and option trading. So that kind of thing can be disastrous. So don't be at either end of the risk spectrum, because if you're in 100% safe assets for 100% of your corpus, then you will barely beat inflation, if that. So you can't be there either. So women, often it is said, are great at savings but not so good at investing. So you have a balanced portfolio where you have different types of assets, including a little bit of gold and so on, but have a diversified asset allocation.
All right, those are certainly pearls of wisdom, not just for women, but for everyone out there. Hi, morning, Devina. So, in your years of investing and the experience and lessons that you've learned along the way, while you did give us a sense as to what the asset allocation should be, are there any, hard don'ts in terms of investing or even in a market environment like this, certain companies that you believe one should really refrain from putting their money in? What would be your take?
Rather than talk about which specific companies today, I would say that risk management should be very central to whatever investing you are doing. I mean, certainly that's the way we do our portfolio and fund management, which is that risk management comes before return maximization. We always say that 60% of the fees you pay is for risk management, and we use a whole lot of tools, including, basic stuff like making sure there is adequate liquidity in the stock, because like especially in small caps, you see the liquidity when it's going up, and then when it starts going down, all the doors close and you can't exit. So right from there to diversification again. So this is again, diversification is an important thing which every investor should look at. That if you are doing investing even on your own only, or even on a do-it-yourself basis, at least have 25, 30 stocks. And it's not just the number of stocks, it should be across sectors. Because I find too many professional fund managers also saying that I invest in my circle of competence, which is really a euphemism for comfort zone, that I invest, if I understand 2 or 3 sectors, that's where I will invest. And that becomes a problem because no theme runs forever. Even if it's a so-called steady business, even if you look at FMCG, for instance, the 2020, when it was the flavor of the season, I had done a full TV interview on that, that if you look at the history even of FMCG, there have been long periods when the steadiest of companies underperform or give no returns at all. Bata gave 0 returns for 15 years. Hindustan Lever from 1999 to 2010 hardly gave any returns. So if you are in a few sectors, there might even be times when you do very well, but that is not sensible. So follow a system in a systematic basis, choose 25, 30 stocks, and even then, some of them are going to be duds. Again, this is another thing you must remember, that one of the smartest thing you can do is that when you are investing, tell yourself, I may be making a mistake, because the best investors in the world, Warren Buffett and so on included, are not right, let alone 100% of the time, even 80, 90% of the time. You are doing very well if you are right 60, 65% of the time. So some of the things you choose are going to be done. So exit when the story you thought didn't play out, and especially if the price falls. We are very strict about stop loss limits. So because otherwise you can always tell yourself stories that this stock is different, I must wait it out and so on. So have risk management in place, choose carefully, systematically, having understood how financials work and so on. And then if you are lucky, then out of those 25, 30 stocks, some of them may turn out to be multi-baggers. But no one ever picks a portfolio of only multi-baggers. So it's always a myth to ask somebody that which is going to be the next multi-bagger.
Oh, well, yes, but one set of stocks which had been a big multi-bagger was the Adani Group of stocks, right? But of late, obviously, we have seen a lot of volatility around it. But now with the recent news flow and the sentiment turning a tad bit more positive, would you be a buyer for Adani Group of stocks or even the PSU banking names, because they had seen a bit of a negative reaction as well?
Yeah, so I mean, we follow an artificial intelligence and machine learning system as our base. So that system has rarely liked the Adani Group, barring the cement stocks at times. So I think we did hold Adani ports also for a short time in the middle. So as part of our risk management system, and the fact that in terms of financials, it was very difficult to justify the valuations. The most of the other Adani names we have never bought, and we still don't hold those. As far as the banks are concerned, no, we after being very negative and with very low weight in banks, right? spiked from 2020, 2021, and from the middle of 2022, we went market weight in banks, which because of price movement then became somewhat overweight. And even when, even before the Adani Group had recovered, I was on TV and I had said that, the reaction on the PSU banks and banking in general seems to be overdone because it had affected even banks which had no exposure to the group. So we have continued to hold the banks, and we still continue to hold them. So that I think was a more of a temporary issue for the banking sector. I don't see an imminent danger from this angle. Of course, I mean, in banking, negative surprises hide somewhere or the other and may come out at some stage. But at the moment, we continue to be reasonably positive on banks.
Devina, let's completely switch gears. Tell me, what's the plan today? I know you're a fellow Ranbir Kapoor fan as well. Have you booked your tickets? His movie releases today.
Oh, I didn't know that.
Okay, so I just gave you a good idea then what to do this evening. But
I have actually not yet started going to theaters. I'm still being quite conservative on the risk of infection given my mother and daughter.
Okay, fair point. I can tell you we're more than making up for it here in Mumbai. But good to have you on the show, Devina, as always. Good speaking with you.
Thank you. Great being there. Bye.